Hello, folks, and welcome to the Real Men of Real Estate radio show. This is Patrick Franz, the Note Mentor. I'm your host, and you know that every second Sunday of the month, I'm live on KCAA Radio, and you can go to kcaaradio.com, click the listen live button. If you're listening now, you probably did that, right? But, on my show, we talk about mortgage note investing, becoming the bank and collecting cash flow from real estate without all the headaches of owning the real estate, right? I mean, who really wants the tenants, the toilets, the trash, the termites, all the problems, the terrible teas? Who really wants to deal with all that? When you can become the bank and collect cash flow fairly passively, folks, from real estate without actually owning the real estate, right? Awesome investment vehicle. In my opinion, one of the best investment vehicles out there, right? And so you guys all know that on my show, I'm going to be bringing on amazing expert guests. Okay. The reason I'm doing so on my show, guys, is I want everybody who's listening to my show to have a well-rounded education on what note investing is and how it may benefit your life and change your financial future. And that's really it, guys. So, as a disclaimer, folks, you know that this is not intended to be legal investing advice. Okay. We're not giving legal investing advice. And, this is opinions, folks. This is why it's opinions from myself, from experiences in the industry, and opinions from my guests with all of their experiences in the industry. And so always consult legal counsel, right? And get some people on your side that can give you the right guidance when making any investment decision at all, even note investing. Right. And so that's the little disclaimer, folks. But thank you for listening in today. And I'm really excited because there's somebody I look up to very much in the industry. Love the guy, hang out with him at events, bug the crud out of him. I'm certain of it. But he's Chaz Guinn, and Chaz Guinn is going to be our guest today, folks. And so you're not going to want to go anywhere. You're going to want to listen to everything that this gentleman has to say. His background and his knowledge in the note space is very, very extensive. Okay, folks. And so we may even blow your minds today a little bit. Who knows? I bet we will. But I'm going to bring him on here real quick. His name is Chaz Guinn, friend of mine, colleague of mine. He's the CEO and founder of a company called Revolve Capital. Okay. And Revolve Capital is a privately held real estate investment firm. And I believe still headquartered in Irving, Texas. Is that right? I know you moved offices. I didn't know where you went, but in Irving, Texas, that's where they're headquartered. They specialize in the purchase, management, and sale of first lien non-performing REO and reperforming mortgage debt, all backed by single family homes across the United States. Been doing this since 2008, guys. Chaz and Revolve, no strangers to this game at all. But their management team has purchased and managed and sold over 10,000 single family homes and billions, guys, with the B in market value. They transact with investors of all sizes. Right? Good news for you guys who are listeners, all sizes, from individual investors through institutional groups like other funds, right? And so guys, Chaz, very respected in the industry. I consider him a friend of mine in the industry, a colleague. And, I told you, Chaz, a while back, I said, one of these days I'm going to start a fund. I'm going to get bigger in this space, and then we'll be able to finally do some business together. So still hoping that's going to come about, because I keep my word, folks, and I have myself a little fund as well, but nowhere near what Revolve is doing. So Chaz, thank you so much for being my guest on the show today. And I want to just bring you in, have you go ahead and introduce yourself to the listeners. Give a little background story so that people can really feel who Chaz is and what led you into this note investing stuff.
Patrick, thank you so much for having me on. Very excited to see your growth, especially in the business, given the last decade that we've known each other. It's radio shows, it's real education and knowledge that we as sellers, managers, fund guys that are managing lots of capital and taking down quite a bit of product, because we know that we need that educational piece and that knowledge piece to have some light shed on it, so folks can realize how big this industry truly is and how we get more and more real estate backed folks into the space. So again, thanks for having me on. Chaz Guinn, been in this space really since 2008, and talk about timing. Right before the 2008 crash, I got into the real estate market in late of 2006, getting right out of college, university, and said, look, I'm passionate about real estate, always have been. I actually had a really unique way of getting into the space when I had an NFL agent. I was actually pursuing to being able to go and play after college football. And my agent at the time was saying, "Hey, look, I'm bifurcated in what I do for my career. I'm a full-time attorney. However, I use capital that I make from not only winning cases and doing law work, but I take some of those funds and I use it to travel the country and find good, talented kids like yourself." And I said, "Wow. But how is that real estate focused, right?" And he was a lawyer that was actually litigating foreclosure and bankruptcy cases. And this is right before the 2008 crash. And so as I start learning more or less the default and the delinquent side of the mortgage industry, here comes 2007 and 2008. And so I had an opportunity where it says, "Look, do you want to continue to potentially play football overseas? Or do you want to kind of potentially hang them up and get into a new career?" So I definitely took a big gamble on myself as a young man and said, "Look, let's get into this space. I think it's going to be pretty big." And at the time in 2008, you thought, hey, look, the distress cycle of being able to get in and purchase thousands of homes, single family homes for major discounts to market, they said it's going to last about a 3-year run, potential 3 to 4 year run. So get in, learn as much as you can, try and make as much as you can, and we'll see how long the market then takes a run out. So you fast forward from 2008 through 2011 and 12, and the market was still more robust than ever, right, Patrick? So you're like, what? Yeah. This market is in 3 years. It's another 3 or 4 year run. And so here we were really realizing that values were still declining in 2009, 10, and 11, and banks could not shed the delinquent balance sheets fast enough. They didn't have enough private investors that were liquid enough to step into this space and really take damage from how much product was available at the time. And so really, that was really my birth into the space, Pat, and couldn't have been more excited about a new industry, because right before 2008, there was no true secondary and capital markets for private investors, right? There was not a big platform or a big open door for folks to say, hey, look, I've got $1 million. I want to start buying fix and flips or single family homes in my backyard. How do I start getting a consistent flow of product? There was no market for you. There was no big open door that said, hey, why don't you come and sign up here and we'll start showing you regular inventory. That didn't exist. And so that's where we really found opportunity to say, how do we build a bridge between major Wall Street firms and private Main Street investors? And that is where we really, where we felt we were a market maker in building a bridge. So allowing guys like yourself and gals that are maybe listening to say, come learn a new arena and a new space. And that's where we stepped out in 2008 to really build a new regime into the market.
Yeah. I mean, for those of you folks listening, if you haven't watched the movie The Big Short, you may go watch it. If you're a movie buff, you're going to like it anyways. It's got top actors in it and things like that, right? Good old Brad Pitt's in there. But The Big Short really kind of depicts that mortgage meltdown that we had in 2008. And so when Chaz here is talking about that kind of timing, right, it's fill that need in the market space. Well, prior to 2008, guys, when the mortgage market melted, prior to that, this was kind of like an institutional buyer's game. Right. I mean, if people could come to the plate and write a 10, 20, 30, 50, $100 million check and they knew the right people, they could get invited to the table and maybe do some deals. And they were buying large pools of these things. Right. But what Chaz is mentioning is that when that market fell in 2008, all these big banks and funds were left with thousands upon thousands of mortgages that were in delinquent phase, and they weren't really prepared to handle all of that infrastructure wise. Okay. When 40% of the portfolio goes non-performing all of a sudden over a year. So they couldn't take all that. And a lot of these guys now need to get those assets off of their books to recapitalize. And what happened was it flooded what we like to call the secondary market with mortgage note investing opportunities. And as that trickle down effect took place, it really came down to where now, guys, it's become sort of mainstream. And so, although this is not a very popular asset class yet, the popularity of it now, Chaz would agree, I'm sure, is growing and growing and growing daily. More and more people hearing about it, getting into it, but still massive opportunity available. And we now have the ability to not have to write $1 million check or even a $50 million check or something like that to play. we folks can literally, instead of buying a rental property and putting a tenant in there and collecting rent as our plan, we can actually get a mortgage note where there's a homeowner living there. And instead of collecting rent and having the hassles of the tenants and such, we literally collect someone's mortgage payment every month. So very powerful position to be in, right? And so, oh, you know what? And being Super Bowl Sunday, right? Who's your pick?
I'm an ex-offensive player. So do you always hear that the best, what wins championships is defenses? And I will say Philadelphia is a stacked defense. Let's not sugarcoat that. However, when you have as much potent offense and you have a coach like one of the best quarterbacks, or the young quarterbacks that we're seeing has the coach that he has, schematically, I would say that the edge from an offensive play is going to go to Kansas City. But one thing I will say is that Kansas City has 3 offensive linemen that are backups. And then you have a Philadelphia defense that has been humming. And not only that, their health is ideal going into this game. So I'm going to say Philadelphia by a touchdown.
Yay. Okay. Well, that's why, folks, I didn't mean to get off track, but I listened to Chaz. Chaz was like, ready to go to the NFL at one point in his life, pretty much. Right. So Chaz knows his stuff about football, and happy Super Bowl Sunday, folks, by the way. I forgot to say that, but yes. So not off track, but listen, now, why then would we say that, being the bank and being a note investor, why is it so awesome? Why do we like it so much and try to tell everybody else it's so awesome? Why? What are the characteristics of notes that make them great?
Well, given it's Super Bowl Sunday, let's stick with the analogies, right? You can play offense, defense, and special teams when you're a note investor. And you can do all of that from the comfort of your home, the comfort of your beach, your cabin, or your airplane. It doesn't matter. And that's what I love so much about this business, is because here in the post-COVID world, folks are looking more and more, how do they stay remote? How can we combat having to go back into the office? And we're seeing many employers and corporate companies across the world that are asking folks to come back into the office now. However, more and more folks are still looking for that home time and that ability to be present with their families. So there's not a business that I love more that allows and caters to that sort of lifestyle, and also allows your ability to get out of your investment to happen in a multitude of ways. Mm-hmm. How many other real estate investments can you make where you have up to 4 to 6 different ways you can exit a property profitably? Okay. Usually if you buy a fix and flip, it's cut and dry. It's 1 or 2 ways, right? How you get out of it. If you do bridge lending or private lending, or if you do commercial assets, there's not a multitude of ways that you can exit a file inside of 12 months profitably. And when you buy note investing, you can take a non-performing mortgage and convert it back into a re-performing mortgage and begin cash flowing the asset. As you begin holding those payments for a period of time, you're now exponentially adding more value to what it's now worth when you go to resell it at a later date. That's one way to profitably exit the file.
I'll tell you this, I'm going to take a break. I didn't mean to cut you off. But folks, that's it. They're secured by real estate. So they're a secure investment. They come with a better than normal yield in general. When people are talking about yield and return on investment, they spit out monthly cash flow, and they're liquid. You can easily get in and out of them, guys. And we're going to continue right when we come back with Chaz Guinn from Revolve Capital on a little bit more about these notes. And you're not going to want to miss it. So don't go anywhere. We'll be right back, folks.